Good morning everyone. I, Shatarupa Mishra, Joint Director of Income Tax Publicity, Directorate of Public Relations, Publications and Publicity, welcome you to a very special series of Samvaad. Friends, the government has introduced the income tax bill in the parliament, a bill that simplifies and consolidates the provision of the existing Income Tax Act 1961. To discuss the bill, its rationale and its impact on taxpayers and tax administration, today we have with us a very special guest on our set. We heartily welcome Shri Shahi Sanjay Kumar. He is an IRS officer of the 1994 batch, presently posted as PCIT VU1, New Delhi. In a career spanning over 3 decades, Sir has worked in diverse charges with an expertise in international taxation and transfer pricing in Jabalpur, Kolkata, Mumbai and Delhi. For 4 years from 2005 to 2009, Sir was on deputation as Deputy Secretary to the Second Administrative Reforms Commission. Sir has been a core member of the core committee which has been instrumental in redrafting the entire Income Tax Act. Thank you, sir, for joining us in this special series of Samvaad. We heartily welcome you. Sir, the new bill introduces the concept of tax year. Sir, what is this concept? What was the requirement for its introduction in the new bill, sir?
Actually, the concept of tax year is very simple. It is a period of 12 months in the financial year. So it will begin from 1st of April. So this new concept is actually replacing the concept of previous year, which is used in the Income Tax Act 1961. So the previous year was a financial year in which the income was earned. So a total income of a person actually pertained to the previous year. The present bill also discontinues the use of the term assessment year. So the assessment year was another financial year which was next to the previous year. So any notice, any letter, any order which the taxpayer received or the return which he filed actually pertained to the assessment year. So it discontinues with that. So now the tax year actually represents both the previous year and the assessment year combined in the same financial year. So whatever notice or letter or order which the taxpayer will be receiving will pertain to a tax year. Originally, the rate or rates of tax pertain to an assessment year, and the Finance Act would be giving the rate or rates of tax for the assessment year, and the total income pertain to the previous year. Now, the total income will also pertain to the tax year. The rate or rates of tax will also pertain to the tax year. This is a major change. Any assessment, any notice, any letter, any order which the taxpayer will be receiving or will be carried out, they will pertain to the tax year only, and the income will also pertain to the tax year only, and they are the same financial year.
Thank you, sir. That has really simplified the provisions for the layman taxpayers, sir. So we would like to know if financial year has been defined in the new bill, and how has it been used in the bill, sir?
Actually, the financial year was not defined in the Income Tax Act 1961 also. So actually, the definition which is found in the General Clauses Act, that is used for the financial year, which is the 12-month period beginning on 1st of April. The same General Clauses Act will apply to the present bill also. Now, coming to the question that why this is required. So there are many actions which are carried out by the income tax authorities or by other authorities also, which actually have a meaning for in the financial year concerned. Yes, for example, if there is a building property for which completion certificate is required by the competent authority, so the competent authority will be issuing, and it will make a sense in context of the financial year, not in the context of the tax year. So basically, financial year is used in such context in the present bill also.
Sir, this brings me to my next question. Will this concept of tax year not conflict with the assessment year, sir?
The bill becomes a law with effect from 1st of April 2026.
Right, sir.
So that means the tax year will be the financial year 26-27. Tax year will be 26-27. Any income which is earned in the financial year 26-27 will pertain to that tax year, and it will be taxed accordingly for the rate or rates which are given by Finance Bill 26. Finance Bill 2026 will give the rates for the tax year, which is 26-27. On the other hand, the assessment year 26-27 will pertain to the previous year 25-26. The income which is earned in the financial year 25-26 will pertain to assessment year 2026-27. So there is a complete difference. The income pertains to financial year 25-26, that will pertain to assessment year 26-27. On the other hand, the tax year 26-27, actually the financial year 26-27, the rates will be provided by finance bill. In our case, for assessment year 26-27, the rates have already been proposed by the finance bill 2025.
Sir, is there any change in the content of the charging section and how has it been simplified, sir?
So the charging section in the present Act, Income Tax Act 1961, that, as I have already told you, it relates the total income to the previous year in case of every person. So the previous year is actually the financial year beginning from 1st of April, and the income which I earned during a particular financial year, that is the previous year, that is a separate concept related to the previous year. On the other hand, the rate or rates of tax actually pertain to the assessment year which were given by a central act, in our case the Finance Act, every year. So the rate or rates of tax pertain to the assessment year, the total income of every person pertain to the previous year, and this was the charge, that total income is charged at what rates? The rates which are given for an assessment year. So presently in the new bill, everything pertains to the tax year. The tax year is a financial year, 12-month period beginning from 1st of April. The total income of a person will pertain to that particular tax year, that means that financial year, and the rate or rates of tax will also pertain to the same tax year, which is the same financial year, and any assessment which will be carried out will also pertain to the same tax year. Any return which will be filed will also pertain to the same tax year. So everything is unified.
Yes.
And we believe that because of that, huge amount of simplification will take place. At least in the mind of the taxpayers, it will become very simple. The income which he earns in a financial year is the same tax year. Any notice or any letter or any return which he will be filing, that will pertain to the same tax year.
Absolutely, sir. Sir, you have extensively worked earlier in the field of international taxation and transfer pricing. Sir, our viewers would like to know if there is anything new in relation to the interpretations of terms contained in the tax treaty as per this new bill, sir.
Actually, the new bill only clarifies the position which is held by India in its tax treaties. So, for example, let's say there is a term which is defined in the tax treaty itself, and it is also defined in the Income Tax Act also. So now it will have the meaning which is the considered view all over the world. It will have the meaning which is given in the tax treaty. If some term is not defined in the tax treaty, but it is defined in the Income Tax Act, then it will have the meaning which is there in the Income Tax Act, or it will have the meaning in the explanation which is provided by the central government. So if the central government provides an explanation, then it will be that explanation. However, if some term is not defined in the treaty and it is also not defined in the Income Tax Act, then it will have the meaning which is given in a notification which is issued by the central government. And if such notification is issued, then the meaning will be there from the date of the tax treaty. It will be effective from the date of the tax treaty. If the term is not defined in the tax treaty, not defined in the act, and there is no notification, then it shall have the meaning which is given in any act of the central government relating to taxes. And if there is no meaning in any act of the central government relating to taxes, then it will have the meaning which is contained in any act of the central government, and that meaning will be effective from the date of the treaty. This is actually the international tax treaty practice, and this is the stand of India in our own tax treaties. So actually it crystallizes in the new bill this formulation which is there in the tax treaty itself.
Thank you, sir. Sir, also my last question is, sir, are there any modifications expected in the provisions related to the general anti-avoidance rule, sir, as per the new bill?
Actually, the general anti-avoidance rules were brought in after a long discussion, and they are in a very crystallized and concise form in the present Income Tax Act 1961.
Right,
So
sir.
they have been retained in the new bill also.
Okay, sir. We thank you again, sir, for taking time out of your busy schedule and enlightening our viewers on this very important concepts of the new income tax bill. Thank you, sir.